Thank you for staying tuned and moving into the street of London. Let's talk to my colleague there, Juliana Olaike. Good morning, Juliana. Well, the Bank of England has welcomed the decision by some UK biggest banks to suspend dividend payments to shareholders and, of course, urged the banks not to pay bonuses to senior staff either. What soundbite are you getting on this?
Well, this had been on the cards for some time now, Chimazi. The drumbeat had been beating from regulators of the banking world, not just here in the UK, but across Europe. And yesterday, the UK's 5 largest lenders did bow to pressure from the Bank of England, and they have decided to cancel their dividend payouts for this year, as well as not pay any major massive bonuses as they typically do. This will cost them about £7.2 billion, and it's unlikely to be welcomed by investors. Just this morning, HSBC, their shares were down by about 8.5%. Standard Chartered, their shares were also down about 7.5%. But this has been an ongoing discussion for a couple of weeks now with the Bank of England's regulator, the Prudential Regulation Authority. They've learned so many severe lessons from what happened in 2008 and the financial crisis. And really now they do not want banks to be seen or to be doing to helping their wealthy clients and benefiting themselves. They want the banks to be ready to help small businesses and households with the COVID-19 crisis. Just last week, the Eurozone as well, they urged Euro banks to stop paying out dividends, and you know, these big banks have followed suit. So it's 5 at the moment. We're expecting all of them. So good news for the moral good of Britain, but of course, if you're an investor who looks forward to your monthly dividend payment, you won't be happy this morning.
And Huawei has come out to say that the rollout of 5G mobile networks in Europe and UK will certainly be delayed because of the coronavirus outbreak. Is this a welcoming news for the UK government?
Well, yes and no, Chimaze. Victor Zhang, he's the senior vice president of Huawei. He has been doing a series of media interviews, especially in the UK, because just yesterday Huawei released their annual report. And one of the questions that came out is whether or not COVID-19 will delay rolling out their 5G network across Europe and the UK. And of course, the inevitable answer was yes, because every world government is focused on trying to combat the deadly virus. But is this likely to affect the relationship that Britain has with Huawei? Yes, I think so. It's always been a controversial project, hasn't it? It was just in January that Prime Minister Boris Johnson, after lengthy discussions and lots of pressure from America, from opposition MPs, and even from his own cabinet members, trying to urge Britain not to allow Huawei in to help him build its 5G network. Britain decided to go for it. If just a small percentage, they said they'll be allowing just 30% of their network. But Huawei seem to believe that what's happening with COVID-19 won't affect its relationship with the rest of Europe and the UK. There are some people that believe that that's complete madness, that geopolitically now China has and will be having, once we come out of this situation, such a very different relationship entirely with the world. And over the weekend, Downing Street did release a statement to the Sunday Times, which is quite a popular newspaper here in the UK, saying that after Britain does emerge from this, that there would be a reckoning for China's relationship with Britain. What exactly does that mean? Not everybody is sure. But one thing that's definitely certain is that Huawei going forward with the UK will be having a detailed analysis of just how indeed they will be conducting their relationship with Britain going forward.
Now, another research today says nearly a fifth of all small and medium-sized businesses in the UK are unlikely to get the cash that they need to survive the next 4 weeks. That's in spite of the unprecedented government support. Is this the case? What are you hearing?
Well, yes, this is the case, sadly. This is a similar situation and a soundbite that we've been hearing from many business owners, even though 2 weeks ago, as you said, you know, the Chancellor did put out these unprecedented loans and grants. I think the main issue that a lot of these small businesses are having is concerning the coronavirus business interruption loan. If you are a small business and you can tick all of the boxes, which those boxes are difficult to tick, by the way, you're able to walk into your high street lender and get a loan up to the amount of £5 million. Now, this is to pay for stock, this is to help pay for staff, and this is basically to keep you afloat. But a lot of these businesses are complaining that they don't meet the criteria. A lot of banks at the moment are open, even where I am in central London, the majority of banks are open. People are struggling to get into the banks, struggling to get on the phone to the banks, because they're, of course, are being inundated with people trying to get these grants and the loans. And also as well, the interest rates. Some interest rates for these loans are charging up to 20%. So it really is difficult, which is one of the reasons why the Bank of England were urging these big lenders to not pay out their dividends, so they do have enough money in the bank for when these small businesses ask them for the funds. But it is a huge issue, and there's just so many different elements of the COVID-19 pandemic that the government is dealing with. But we are expecting the Chancellor towards the end of this week to come up with a new measure to try and encourage banks to lend specifically as they've been asked to.
All right, thank you very much, Juliana. We hope to get more update from you later in the day. Back here, the debt and currency market. Let's talk to Chioma Udu, fixed income dealer with GT Bank. Good morning, Chioma. Well, this is a new quarter. So how would you say the debt and currency market fared in the last quarter? And of course, what's the outlook for the new quarter?
Good morning. Towards the ending of the quarter, we've seen market really slow down with quiet pockets of trading. Yesterday, we saw a little trading, pockets of trading here and there. The T-bills market rates were just about 13% discount with the yield of 15 across the T-bill curve. We expect this trend to continue really because of the lockdown, and all we expect to see is just reinvestment. But today we have the PMO auction, about 90 billion is an offer. We expect 95 billion is an offer across retainers. We expect the rate to come out at the last top rate, which is about 2.5, 3.5, and 5.5. Moving to the bond space, quite trading there. The bond calendar was released, 90 billion on offer for the quarter, but it's subject to amendment. So we will just wait and see. We have this wait and see approach for the market.
All right, with the primary auctions today, what are the expectations going forward, and what impact would that have on OMO maturity tomorrow?
Well, what we see really is basically we're going to see a reinvestment play. People are locked down at home, so there's little or no activity in the market. So we'll just basically see reinvestment play. And then for the OMO maturities, we'll see if there's an OMO tomorrow, if student offers an OMO tomorrow, we'll see reinvestment as well. So it's just basically reinvestment play for now.
All right, the currency market, can you bring us up to speed? What's happening there?
Well, the FX rates are currently at about 385 on the INE window. That's what's happening on FX.
All right, thank you very much for your time, Chioma Udu. Chioma Udu is a fixed income dealer with GT Bank. And that's it on the program for today. Thank you for watching. I'm Chimeze Obi Iwago.